Hello, traders. Welcome to another episode with me, Daniel. Today, I want to do a trade recap. All right. Today, I want to do a trade recap. Normally, this is the day where I release my midweek analysis video in regards to, it usually is a follow up on the video that I release every single weekend, yeah, on the weekends rather. So today I'm not gonna do that because I still want to see some more action in the markets. And if you've been following the pairs that I'm trading, you very well know that we do not have liquidity, or the market basically has been ranging for most of the parts. So this is GU, and as you can see, we are just ranging. We're just ranging, not really moving anywhere. Now also the same picture with EU, but right now I can see that the market has started to move. But looking at the bigger picture, we are just also stuck in a range because we have this fractal protected low and the fractal protected high, and the market has just been in between. So until I see some more actions, or some more action, or some more price action, I'm just staying out of these markets. But just to give you a very simple or a summarized version of what I call the midweek analysis, let's just call it that. You can see that what I was expecting is for us to take out this buy side liquidity. Remember, we do have these equal highs, which to me are acting as an inducement. All of this is just an inducement, and the actual zone where I'm looking to take my shots from is this zone. It's this 4 hourly zone that is above these equal highs. All right. So what does that mean? That means that once the price, and that actually happened yesterday. You can see on Monday we had that aggressive move to the upside. Yeah, we had that aggressive move to the upside, and we ended up breaking the internal structure. So right now, all we were expecting is for the market to pull back all the way to the 50% level, and then we continue with our bias or with our buys. And that is exactly what ended up happening. The market came all the way to the 50%. All right. This is the 50%, and I don't know whether that is visible to you, but let's just make it a little bit more visible. So you see where we have that green line, that is the 50% of the range, and the orange is the 61.8. Normally, most market do tend to respect those two levels. If you can just place your buy order, all right, in between those two levels, more often than not, you will get activated. But that is a science, all right? Let me just say that that is a science that you have to learn. So back to what I was saying, the market came all the way to the 50% level, and then you can see the buy, right? The reaction that we got from that. Of course, we are not, the market was not trading from a vacuum. We had that buy demand order block, and that is what gave that market that reaction that we are getting. So right now, price came to that supply order block, and you can see the reaction, but this is just a reactionary block. I do not expect to see much from it. All I expect to see is a continuation move to the upside. All right, but of course, I can be wrong. I'm not saying that that is exactly what's going to happen. Of course, we may see the market actually selling from there, or the way I take trading, I just react from what I'm seeing. I don't try to form my own hypothesis. I don't try to form my own ideas. I don't try to form my, you know, things. I just react to what I'm seeing in the market. So if this zone can give us that push to the downside, of course, I'm going to take those trades. But I'm not stuck with my buyer saying that we're going to buy and we're going to see the market buying and I'm stuck there. No. we may see the market actually selling from this point. Same thing with GU. I'm sorry about I'm sorry for that, guys. So let's just go back to what I was saying. Also, looking at GU, the same picture. The market has just been ranging. Although GU has, what do I say? Comparing the two, I think actually EU does have a better price action than GU, because you can see we're just ranging, not going anywhere, right? So for now, I'm just gonna stay out of the markets um, until something happens. Yeah. So yeah, that is just a basic rundown on the midweek. Yeah, the midweek updates. So let's just go back to what I was saying earlier. I just want to give this a trade update or a trade recap on how I took this trade, uh, why I took that trade, because I think it's really important. So before I go to or before I give that trade recap, let me just point out one thing. I'm a swing trader, all right? I am a swing trader, and my main time frames of focus are usually my main time frames of focus are usually the daily as my higher time frame, the 4 hours as my medium time frame, the 15 minutes. So you may wonder, why do we have the 1 hour? 1 hour is just for refinement, all right? 1 hour, you just use it to refine, nothing else. So that being said, this trade that I took on Friday was based on an intraday opportunity that I saw. So now, if I'm an when I trade the intraday, when I trade or when I get into position where I'm expecting to get out of the position within the same day, as in the intraday trading, normally I base that on the 15 minutes. So the 4 hours is my higher time frame, the 15 minutes is my medium time frame, and the 5 minutes, the 1 minute, or even the 3 minutes becomes my execution time frame. So with that out of the way, let's just recap using the intraday concepts. Yeah. So on this trade, or on that day, what I did see is that EU was bullish. I was trading the internal of the 4 hours, and as you can see, we are bullish. We are breaking structure to the upside. Yeah, we are breaking structure to the upside, and I was at this point. Yeah. No, actually, I was at this point. So having that knowledge that we are looking for ups or longs, sorry, having that knowledge that we are looking for long trading opportunities, and possibly this being the next area of target, this high being the area of target. Yeah, I just want you to imagine this hasn't happened. Um, this hasn't happened. So this area is my 4 hours internal targeted high. All right. So with that knowledge, then I jumped into the 15 minutes, and onto the 15 minutes, all I was waiting for, remember, this is the target. This is the target. Yeah. This high was the target. All I was waiting for is for the market to come back into this zone. All right. Because I had already marked out my zones. If you can go back to the 4 hours, had already marked out my zones. I had marked out this zone. If you can remember, I can just show you using my swing trading chart. You remember, actually, if you can go back to the videos, you remember I had marked out that level, and I told you that that was a breaker, and also that was confluenced by the fact that we had these STB weeks. All right, we had those sell to buy weeks, so that was kind of acting as my demand level. So now on the 15 minutes, you can go back to this chart. On the 15 minutes, I was looking at that zone as an area of interest. All right. I was looking at that zone as an area of interest. So now when the market came back to that zone, so this is it. When the market now came back to that zone, we had that zone. I had already, now this is a whole demand order block on the 15 minutes. Okay, the STB wicks, these wicks on the higher time frames, they are just wicks, but on the lower time frames, they are a fully formed demand and supply zones, as you can see. All right, so I marked up that zone and I was just waiting for price to come back into the zone. All right, so let's just delete that. All I was just waiting for is for price to come back to that zone. But what was making me confident also, as you can see, it is a structure zone, first of all right? It is a structure zone. That is the first thing that you need to understand. And by structure zone, I do mean that it went on to break some significant form of structure, because this is where the internal of the 15 minutes break structure to the upside. So that was the last area of demand. That was the last injection needed, because just think about it this way: the market is trading all the way to the upside, all right, but then supply kicks in, all right, pushing the market to the downside. So buyers step into the market and they push price aggressively, and you can see this is just a very aggressive moves to the upside. All right, so that was the last area of demand, or that was the last area of supply to come into the market. Okay, so or that is where the buyers stepped into the market to push price aggressively to the upside. And as you can see, once we broke that structure to the upside, the resulting move. So I saw that and I was like, okay, that is a strong zone. All right, that is a structural zone because it breaks that structure. Now, the second thing that I did notice was the fact that we took out liquidity to the downside. All right, we took out the liquidity to the downside. Remember, this was or as you can see, this is a low. All right, and then the market pushes to the upside, and then when price comes back, it trades just a notch lower than this low, and essentially we take that liquidity to the upside. So apart from it being a structural zone, it was also a sweep zone. So for me, those were the two criteria that I used to verify that this possibly is a very, very strong demand zone. So all I was waiting for is for price to come back to the zone and then enter those long opportunities. All right. So with that being said, price came in. We mitigated that zone. After we mitigate, I then jump onto the 5 minutes time frame. It has to be methodical. It has to be very, very. It has to be very, very. It has to be very, very mechanical the way I trade. Yeah, I just don't jump into the 5 minutes or into my execution time frame without having seen the 15 minutes demand area being mitigated. And what do I mean by mitigation? All this time I'm in the 15 minutes, I'm waiting, all right? All of this time I'm in the 15 minutes, I'm waiting for price to come back into the zone. Once we tap the zone right there, that's when I jump into my 15 minutes, into my 5 minutes to look for my entry criteria or my entry model. So my entry model is very, very simple. All I'm just waiting for is to see a level of inducement. And what do I mean by inducement? Inducement is when we kind of trick people into doing something that they don't want to do, essentially. So by inducement, I mean, as you can see, the market is selling. We are selling all the way, but once we reach at that level, you can see the reaction that we are getting. So what makes this inducement very strong is the fact that we get that, because this is kind of a significant piece of structure, but we break it. essentially telling the buyers that who bought from this level that the move that we got from here is a very, very strong buy signal. So people are gonna be looking at this level, and they want to get involved into the market, and that now becomes that inducement. All right, that becomes the inducement that I'm looking for. All right, so I saw that, and I marked it out as my level of inducement. So all I'm just waiting for is for the market to tap into my zone. Once we tap into that zone, the next thing that I'm looking for is for a change of character, and that is exactly what we get. After we tap into that zone, we get that change of character, and then you can see the resulting move. We start to move to the upside, but then I actually sent this trade idea to my Telegram community. This is it. I told guys, just wait. All right. I just placed a buy limit order at this level, and that is I sent that to my trading group on Telegram. Yeah, and as you can see, the market actually, reverses quite strongly. But what I had not paid attention to is the fact that we had this 5 minutes demand order block, right? We had that 5 minutes demand order block. All right. So the market came all the way to the downside and retested that block. And as you can see, that was the resulting move that we got, giving me 36 pips to the upside, or essentially a 3.73 R, and a stop loss of about 9.7 pips. Okay. I could have easily taken out that target, giving me what? The initial target, because this was the initial target, giving me about 4.82 R. All right. So, what are some of the good things that I did with this trade? It respected my entry model. Okay, that is one thing that I did follow my entry criteria to the T. So that was one thing. The next, or probably one of the mistakes that I noted was the fact that we had that demand zone that I had not paid attention to. Or the market could have as easily gone and taken out that liquidity that is resting below these lows. It could have as easily done that, and that would have stopped me out. So going into the next trade, or the trade that presents itself, I'll be sure to pay close attention to some of these order blocks. Yeah. So right now, we have another trade that I'm waiting for, and that I'm looking closely at. The same trade idea, the same concept. All I'm just waiting for is for the market to come back to the zone, right? And probably we may get that continuation move to the upside, targeting what? Targeting this 15 minutes internal targeted high. So the other thing that I do want to mention, this is the first trade that I took for this month. All right. And last month I only had one trade on GU. All right. If I can just show you that, GU. I can just show you that I had only one trade for that, and this was it. Had one trade. This other trade was never activated. So I'm just waiting to see whether once we get to that zone, whether I'll get a trading opportunity. So yeah, if you want to join my trading community, the link is in the description. And I'll see you there. So that was the trade recap. Probably I may release a midweek analysis video probably tomorrow. So until then, I'll see you. Bye bye.